is a bank at a time like this? In a world filled with uncertainties, where lives are put on hold, business paused, and working together means staying apart. At Absa, being a bank means staying connected. It means being a part of your future, providing relief at a time of need, and doing this through effective, secure online platforms. It means staying in touch when everyone else seems distant. Being a bank means knowing that we've come from far and are yet to go further. Sibuya kude futhi sisaya kude. And that possibly this could be a time for a new beginning, an opportunity to reflect and rebuild. We are alongside you, helping you to and grow your legacies. We are in this together. Regal Fela, Sisoke. Once as Amal San. That is African messaging.
Welcome to episode 68 of the Private Property Podcast. I'm your host, Zama Khumalo. It's a Friday edition of the show, and of course, we'll be speaking to an Absa representative this evening. And this is one of those episodes you simply do not want to miss. If you've certainly got an interest in commercial property, this is one of those episodes that you want to stay tuned into. We're going to be looking at insights into the commercial property landscape, getting a sense of what the commercial property landscape is right now, certainly during COVID and pre-COVID, and perhaps some of the opportunities that we can look forward to. And I'm sure that so many of us who have an interest in going into commercial property probably also want to get a sense of what the landing criteria is in that particular space and what the banks are essentially looking for when we approach them. So those are some of the nuggets that we'll certainly be sharing in this evening's episode. So if you have any questions or comments where that's concerned, do send them through. I think this is one of those episodes where if you're certainly ready as an investor to up your game, go from, whether it is having those 2, 3, 4 units to starting looking at bigger properties, you certainly want to stay tuned to this one. And of course, it is the 17th, and as promised, we're going to be unveiling the 2 lucky winners who are going to walk away with that 1,000 Rand cash prize. As you know, we've been running that competition where we've been asking you all about your favorite town or city, and if there was a particular feature that you loved with it. We've certainly gone through all of your entries, and the team loved reading through it. I think some of the stories were so heartwarming and gave us really an insight into the neighborhoods that you live in, that you can of course find out more of on privateproperty.co.za if you want to get a sense of the different neighborhoods that you can access across the country. We'll be sharing those 2 lucky winners and their story about their town or city that they certainly love. And there's also a surprise giveaway. You don't want to miss this one. And I'm not going to give away what the surprise giveaway is. You're going to have to stay tuned until later on the show to find out more about it. But for today's conversation, as I said, we're looking into the insights into the commercial property landscape. I'm joined by Mike Mortimer, who is the head of SA coverage at Absa Commercial Property Finance. And Mike actually heads up Absa's unlisted commercial property finance business and has over 10 years experience of property finance and has represented Absa at various boards of governance forums. Mike, thank you so much for joining us this evening. I think, Mike, one of those things when we talk about, commercial real estate, certainly as investors who haven't gotten to that next level, is we sometimes don't know how to get the best sense of what the commercial property landscape looks like, especially for investors who are probably now thinking, perhaps instead of just looking at 1 or 2 units, I should go for that block of flats, or I should go for, that, building that I once spotted. Perhaps give us a sense of the, general landscape, firstly, of the commercial property space, certainly right now during lockdown, and perhaps some of the trade.
Sure. Just to cover what we sort of define as commercial property finance, it is largely anything where you are dependent on income from a third-party tenant. So unlike your own home where you're responsible for servicing your own bond from your own income, by and large, it's an investment. And that can take clearly very, very many different shapes, forms, and sizes. It can be in the form of retail, where you're letting to one or more retail tenants. It can be in the form of an office block. It can be a residential portfolio, industrial properties, and then we even have things like mixed use, where it would be a combination. Those are typically larger, more specialized developments. And then, what would also fall into commercial property, and which we provide funding for, is what we call owner-occupied. So where you have a business and you looking to acquire properties to run your own business as a form of, I suppose, diversification of your portfolio, your investment portfolio, and also a lot of people would do that as a means to controlling their own destiny. The way we would look at that would be quite different from an investment property. An investment property, it's all about the income, the sustainability of that income. On an owner-occupied property, it's more about the sustainability of your underlying business operation, because that's the engine that feeds the ultimate investment. So it's a very diverse range, and obviously it can differ in pure rand terms from sort of a couple 100,000 rand, R1 million up to investments and developments into the billions. So very wide, very diverse, and obviously highly specialized in each particular sector. Where we in the industry were sort of going into the COVID period, the sector was in reasonable shape. I think we mustn't lose sight of the fact that we were in a depressed economic environment, long before this particular pandemic hit, and that reflected in the property industry as well. So, our business and that of, I suppose, most of our competitors was in a good shape, because, it's all a function of your lending and how prudent you are around that. And if you structure that appropriately and you focus, you adopt the appropriate risk metrics, then you should be in good shape. So our business was in good shape, but the market activity was relatively muted. And, I suppose what has happened now quite clearly and understandably is that, the entire property sector, as it does mirrors the economy closely, is very little activity at the moment. Most people are just looking at sort of protecting, maintaining, managing their existing assets. And as one would expect, there's limited trading or new development activity happening right
now. And Mike, as you're even saying, was not necessarily in the greatest shape. And we're always saying, certainly from a consumer perspective, you're probably happy because it was a buyer's market pre-COVID, for example. And I think the COVID crisis has also meant that you're able to be slightly more bullish on how you're negotiating with potential, sellers. So to see that that's also been similar activity, certainly within the commercial property finance space, is of course, and the effect that's essentially had on their landlords who are running the malls and different complexes where they may not be able to collect the same kinds of rental that they were collecting from their from their tenants. Which I guess brings me to my next question, which is essentially what has Absa's response been given the challenges that the pandemic has put
so
many
absolutely,
of us.
and as I said, it's the focus right now is on maintaining value, maintaining the cash flow, and managing those investments. And we obviously see ourselves as intricate partners with our clients in that. So, it became apparent very early on in the pandemic that there was going to be a lot of stress in the sector, and it was. As I say, in terms of our owner-occupied book, which I referred to earlier, which is those where we are effectively lending people to occupy and operate their own premises, their own businesses from, we went to the market very early and offered a blanket moratorium. We recognised that those businesses were going to be hit hard and hit immediately. So rather than waiting for clients to approach us, we effectively went out and in essence gave them the opportunity of a payment moratorium. Now that could have taken different forms, either for a 3 or 6 month period, either in terms of the entire payment commitment, or simply in terms of the capital component, because obviously every loan repayment typically would have an interest and a capital piece. So we would what we call capitalize the loan, or at least the capital component, or in other instances, we gave them a payment holiday. A number of our clients took interact with clients on a continual basis in order to try and meet their needs. We've probably applied payment relief to about 35% of our entire client base, and those are the ones who've approached us for that. And those, as I say, are typically 3 or 6 month payment holidays. And we are now at the period where a lot of those are coming to an end, so we are engaging with them again to see the extent to which business activity has picked up, which gratifyingly in many instances it has. As we entered level 3 and more trading activity took place, we're seeing some income starting to flow back into those portfolios. So we've been quite heartened by the fact that not as many as we expected have come to us to extend that payment relief, which we like to see as a good sign, and we like to see as some reflection of an element, let's call it an element of certainty returning, or an element of normality, but there's a long way to go still, and it's all a case of working with our clients as we have done on a case-by-case basis.
And Mike, you mentioned that I think it's the 35% of your client base took the payment relief in whatever different form that was available to them. Is that the commercial property finance, or just holistically the Absa Home Loans client base?
No, that would be particularly the commercial property finance. So that is and that, as I say, but they would cut across clients who have retail property, shopping centres, offices, industrial properties. We do have clients who have big residential portfolios, and they would have approached it well. So it was across a variety of sectors, but all within the broader commercial property finance.
So I mean, Mike, I think one of the things that has certainly come out when we speak about just bank financing in general, and a bank's appetite to extend credit in this particular time, is consumers have been slightly worried that they might not be able to access credit. And I mean, when we talk about property, you certainly want to be able to access credit. We're seeing historically low interest rates, and perhaps, people are thinking this is now my opportunity to get into the property market. But of course, because you're dealing with the commercial property finance space, I certainly want to get a sense of Absa's approach to new lending opportunities when it comes to the property finance space. Because I think there's certainly investors that have an appetite for raising capital because they're seeing the different opportunities. And perhaps some of them are already trying to raise capital in different shapes and forms. But they might think, well, are banks right now actually extending access who are bringing up the right deals? So perhaps take us through, Absa's approach to lending opportunities, particularly.
Yeah, look, and there will certainly be opportunities that will present themselves, and we can chat a little bit about that if we have time. But and in this regard, I'll speak specifically to Absa rather than to the broader sector. We are on a strategy of and that trajectory and that strategy of ours remains unchanged. What is certainly from our point of view is, we've been in the game a long time. We've seen some down cycles, and we've seen some buoyant markets. And I suppose the one that all comes to mind for many of us is the 2008 subprime crisis. And we learned lessons out of that, as all banks do, as our clients did, and we'll come out with the scars, but perhaps a little wiser and a little stronger. And one of the focus areas that we learned at that time, and we're certainly applying now, is that value is, in times like these, possibly of secondary importance to cash flow. And there was a time in the property industry you would come to us and say, what do you lend? And we said, we'll lend you a 70 or 80, whatever it might be. What we realized then, and we're seeing again, is that value is very transitional when the market goes down, because value is everyone's opinion. Value is a subjective thing, and value is only really crystallized when deals happen, when trades happen. And in times like this, trades aren't happening because the buyer's looking for a bargain, the seller's not ready to sell yet, they're missing each other, and therefore there's not much activity taking place. And everyone has their own view of what the value is. So the default position is to go back to cash flow, focus on that, and make sure that that's sustainable through the cycles, do your stress testing and the like. We have adopted that approach to our business, for a number of years now, and we continue to do so, and will continue to do so through the cycle. So there will be opportunities. Our strategy is unchanged. Of course, we take the lessons on board. Of course, we have tweak it through times, unprecedented times that we're living in now. But that doesn't mean we're closing our doors. There will be opportunities, a number of those, some indications of certain sectors that will provide opportunities are already starting to show themselves. But, I think the point to make is that when somebody approaches us for a loan, the conversation we will have with them in depth is around what is the source of the repayment, how secure is it, how much stress can this portfolio, if this tenant does, what is the future of this tenant? Will they survive? And if not, how quickly can you replace? How much stress can this tenant fall off in this state? Interest rate increases, could it sustain? If interest rates suddenly start ticking up, what is your stress level there? That said, I think one of the benefits we're sitting with right now has been a very low interest rate environment, and our forecast is that it will remain such for a while. So that's an opportunity to take advantage of. So we are in business. We're not naive and we're not blind to the environment we find ourselves in, and those will all feed into the conversations we'll have with our clients when they look to acquire or fund new acquisitions. But certainly, our strategy remains, as it has been for a number of years, to continue to be largely, highly relevant to our clients and to the broader property sector.
Mike, as we were talking about some of the other things that you're certainly looking at when people bring the potential deals, going beyond looking at the LTV, because as we say, value certainly in this climate is one of those things that isn't as tangible as it certainly was pre-COVID. A part of me is thinking of, and I know viewers at home have heard me talk about this quite a lot. I'm thinking of my real estate finance course and the different times you kind of have to run various models to account for different kinds of crises, right? So where there's a bit of uncertainty, you certainly bring in the cash flow component and almost want to say, if your vacancy is at X%, are you still able to cover all the expenses? Are you still able to make your mortgage payment? And so I think it's certainly one of those things when you look at the commercial property space that you always have to be mindful of, because there's so many different models that can help you better understand certainly your individual portfolio. Obviously, when we're now going to commercial real estate, where that kind of stress testing, especially if you're going to be pursuing a deal right now, is so crucial. Mark, we're going to go for a quick break, and when we come back, I actually want to talk about some of the opportunities that you've essentially highlighted, because I'm sure so many people are thinking, this is a time of crisis. Everybody keeps talking about the different opportunities that came up in the 2008 financial crash, and how they were able to get great properties, how some of them were able to enter into the commercial real estate sector because they saw some of those opportunities and were able to structure really good deals. Some of us, unfortunately, were too young for that. So we certainly want to be able to see how should we be thinking through some of the opportunities that we're facing. But also, Mark, I think one of the things that we certainly want to talk about also after the break is perhaps what Absa's view is on, whether we're going to be seeing distressed sales after this, how we're going to be handling that, because I think a lot of property investors are also, some of them holding back because they're thinking this is still relatively early. Perhaps let's see if we're going to see more distressed properties, especially the distressed commercial properties, because I think those are going to be there. And I'm already seeing example opportunities where investors, some of them are going for some of the commercial sort of portfolio, but they know that those underlying businesses are still going to be able to survive COVID. So they're thinking, let's rather take on, that business, buy out that business, and see whether or not we can weather the storm. So we're going to go for a quick break, and we'll come back. We'll certainly be exploring those issues. If you have any questions or comments around, do send them through. We're certainly interested to hear from people who've ventured into commercial real estate and some of their experience in commercial real estate. I think it's certainly one of those things that you probably go into once you've got a better understanding of property. It's not one of those things that you jump into when you haven't managed a property at all. As Mark was saying, it's certainly one of those things you want to tread very carefully on. We're going to go for a quick break, and we'll be back just after this.
What is a bank at a time like this? In a world filled with uncertainties, where lives are put on hold, business paused, and working together means staying apart. At Absa, being a bank means staying connected. It means being a part of your future, providing relief at a time of need, and doing this through effective, secure online platforms. It means staying in touch when everyone else seems distant. Being a bank means knowing that we've come from far and are yet to go further. Sibuya kude futhi sisaya kude. and that possibly this could be a time for a new beginning, an opportunity to reflect and rebuild. We are alongside you, helping you to finance your dreams and grow your legacies. We are in this together. Regal Fela, Sisonke. Once as Amal San. That is African messaging.
Welcome back to episode 68 of the Private Property Podcast. I'm your host, Zama, getting insights into the commercial coverage at Absa Commercial Property Finance. Mike, before the break, I did say one of the things I wanted to chat about is some of the opportunities that you've certainly alluded to, that the spread is going to bring about certain opportunities. Perhaps take us through what some of those opportunities that potentially are, and perhaps how people, not even how people can take advantage of them, just so we're aware should we want to take advantage of them. Because I think we certainly have a lot of people who have an interest perhaps in going into commercial real estate, but might not be able to know how to just logically think through it, because often very accustomed to.
Yeah, thanks, Mtungwa. So we certainly are seeing, it's probably a little bit premature to say the opportunities, but as we're seeing trends changing, one can start thinking about how that plays into the commercial property world. So, if one thinks about it, the whole work from home concept. Now, the immediate thought is, well, what does that mean for offices? Offices will have to look at their design configurations. Clearly, the space per employee is going to be, and the sanitation components and the like, and the hygienic. What the reality is, the whole work from home culture. So, what we are already seeing is people starting to look at their home environments a lot more carefully, and the design and the functionality of their homes. And people are starting to look to investing into their homes because they're seeing it not just as a home, but as a place of work potentially. So, if you're a person looking to develop sort of residential, there may be an opportunity there. If you are simply an investor looking to acquire a bigger residential portfolio, I think we're going to see uptick in the need for sort of contained residential development. So, opportunities, and as an investor looking to invest in developments that offer that kind of opportunity. Can you still hear me?
Yes, I can. Yes, I can.
Oh, sorry, it looked like you'd frozen on the screen. Apologies. So I think that's one from a residential point of view. In terms of retail, what is becoming very apparent is that convenience retail is becoming critical. People want to get in, to get out, and so those workman-like shopping centers, we call them workman-like because it's your supermarket, your hairdresser, your basic sort of day-to-day essentials. But what is key for developments like that is location and accessibility, because they need to be out of the hygienic aspect is quite important. So we're seeing those opportunities presenting themselves. And that may feed through into, I spoke earlier about the owner-occupied type of development. And I think what you will find as well, regrettably, is certain tenants who have become quite vulnerable in shopping centres, because landlords are looking at them now and saying, well, I've got a tenant who's in essential services, they're important to me. But the tenant who sort of focuses more on discretionary spending, maybe I'm less enthusiastic about them because I'm not sure how certain they are and how much sort of consumer spending and what the need will be for that tenant on a standalone basis, to give them some degree of dependence and independence from the landlord. So I wonder whether we're not going to see those kind of owner-occupier, a tenant who was let's call it a hairdresser for argument's sake, in a shopping centre, and I'm saying I'd rather go and buy my own property or go and rent from somebody where I've got certainty. So, that's again an opportunity if you're looking to trade those kind of properties or looking to acquire one for that time. As other sectors, we are seeing sort of demand for things like retirement villages, sort of folk who are feeling a little older, a little bit more vulnerable, suddenly feeling more exposed at this time, looking for a safe, secure environment where their sort of healthcare and basic amenities and facilities are available. So, again, these are big development projects, so they're not for everybody. But, if you're somebody who hasn't as well. The other area we're definitely seeing sort of increased demand for is in the industrial sector. As online starts to pick up, things like distribution centers, things like data centers with the great proliferation of IT technology and remote working, and the whole supply chain dynamic now, where we've suddenly got to get stock, directly from sort of the wholesaler to the consumer. So this presents opportunities, and people. What I would urge them to is just, be cautious. Don't jump into the first thing you see, but just watch the market very closely. Regrettably, there will be consequence to this. There will be properties that, despite our best efforts to nurse our clients through this, I don't think any of us are naive enough to think that there won't be, adverse consequence, and there won't be losses, and there won't be properties coming onto the market. So I think people should just, be aware of it, and when you're looking at opportunities, don't jump at the first thing. Make sure you understand the dynamics of that particular sector very closely. So if you think there's an opportunity in the office market, make sure you understand the dynamics of that sector. If you're looking to acquire in a particular area, make sure you understand exactly what the sort of the dynamics are of that area, what other stock is available, how it compares with yours. And then, again, right back to the cash flow thing. How are you going to, if it's let already, how certain, you spoke about it earlier, how certain is your tenant and your tenant sustainability in this market? And, how sure of you are that, if that tenant survives, that you can replace the tenant, and how, I suppose, how flexible are you, and how flexible is that property to withstand any longer term sort of adverse consequence that may flow from this?
And Mike, as you're speaking about, so the consequences, one of the comments that's actually come in is from Richard Gardner, who echoes that. He says, we know that the expected recovery of the economy is anticipated to take years. Cash flow will be lower than previously expected, and the repayments will also be difficult. In terms of the Consumer Protection Act, some clients will not be able to make payments and will hold you accountable to, because loans have essentially been extended to them, and perhaps they may even be forced to shut down their business. So it is one of those things where you almost need to take a particular strategic view and be quite certain about the decision that you're about to embark on, but also understand the possible repercussions, as you saying. I think one of the things Mike actually wanted to talk about is perhaps, does Absa essentially expect to see a significant flooding the market? I mean, I think there've been quite a number of different, commentators who are saying the market is going to be very heavily flooded. Some are saying maybe we're not going to necessarily see it in this quarter, perhaps in the next quarter. And even when you look at, for example, just when you look at residential data, that when lockdown slowly started, being the easing of the lockdown happened, we know that those first few registrations, those first couple of hundreds, even thousands, were because of the pent-up demand. So, some spectators are certainly saying, look, right now, this is not necessarily a representation of a market being flooded by distressed property, but is Absa essentially, anticipating that we're going to have distressed assets flooding the market in the coming months? As we're saying, certainly don't know how long this period is going to last. So it's almost one of those things that you become very difficult. And like if we had an end term, it would probably be easier to compute certain things.
Yeah. Yeah, I think you're absolutely right. In March, if you'd asked us whether we all thought we'd still be sitting here now, we'd probably say, no, we wait through it by now. So the challenge is just, and that's what I think causes the great uncertainty, is just the unknown factor and how long this will persist. As I spoke about earlier about the payment relief we've extended to our clients, and the important thing is that equal to every property that goes into some form of liquidation or into a distress scenario. Typical facility or the total purchase price in the case of an acquisition. So we have a lot to lose. What we have seen is the payment relief we provided now certainly provided much needed assistance. And as I said to you earlier, we haven't seen the approaches for rollover or extensions of that to the extent we expected. And I'm choosing to see that as a positive, because I think a lot of them are starting to see some income coming in and not having to lose them. So to answer your question, I mean, absolutely, there will be consequence, there will be bad debts, there will be loans that won't flood the market, but there will certainly be distressed assets. I think the important thing is, from our point of view as a bank, is our last resort is to foreclose on a client, because we know then that we are, whether we're foreclosing and taking it to a sale and execution or going through a liquidation process, we stand, if we look at it from our mercenary point of view, we stand to lose a lot out of that, and clearly it doesn't help our clients. So, we typically would be engaging with the market, with our client, or on behalf of our client where they are in that distress. And I suppose, lesson for all of us is the beginning. I'm not suggesting anyone could have foreseen this, so it's easy to be wise after the fact. But those who structured them sufficiently conservatively at the outset and have enough cash buffer now to see them through this are the ones that will probably survive. So although we're in the business of lending, we always say be prudent in the level of your gearing, the amount you borrow. Because, if a year ago you bought a new property and you borrowed at 80% loan to value versus the guy next door who bought the same property, borrowed it at 50% next to value, yes, they've got equity at risk, but they're not running the same risk of that property defaulting and being taken back. So we will see downturn will buy the overwhelming majority of our clients the sort of runway they need. But when those opportunities do present themselves, I think key for any potential investors is not to go from out of the fat and into the fire. Make sure that you do your homework, that when you see those opportunities, that you thoroughly interrogate them, and look at the cash flow, look at the stress test as you return, and maybe the last thing is the risk return dynamic. If the return looks too good, it probably is. Simple risk return dynamics. The lower the risk, the lower the return, the higher the risk, the higher return. So if you're seeing something where somebody's trying to offload it at disproportionately high first-year returns, ask yourself why.
Yeah, and I think it's certainly one of those things that I've seen different ads where when you look at the property and they're also selling the underlying business, the figures that they're taking out, your first thought is, if the numbers are this good, then why are you offloading that particular asset? Because there's no reason why anybody would offload that asset at those numbers, even if you wanted the extra liquidity for yourself. There simply isn't any reason. My one last question before I let you go, because I'm sure people who now certainly have an appetite for commercial property and want to perhaps venture into it slightly, you've already given us some of the tips that we certainly should try to be implementing in the event where you want to be taking advantage of whatever commercial real estate opportunities that you're seeing out there. Suppose somebody has now sort of done the stress testing, they've run their figures, they're relatively confident that, look, this is a good deal. When we approach, Absa, what kind of conversation are we essentially having with Absa? Because I think we typically don't know how the financing for commercial property is versus a normal residential property, where we know, you can just even walk into a branch and they'll be able to direct you sufficiently. We even know the kind of documents we ought to be bringing in. We've certainly covered that right here on the Private Property podcast. So the moment you're now talking commercial property finance, are we bringing the business plan? Are we also bringing the numbers that we're running? Sort of at a very basic level, what kind of sort of case or how we're structuring the deal as we are approaching the bank.
Okay. So yeah, so I mean, in essence, what we would be looking to in the conversation, because it's all a conversation we'd be having with you, is sort of what is your thinking around acquiring this property? When did you acquire it? So the first thing we'd ask for is a copy of the sale agreement. You know, and I'm talking about somebody for this purpose of this exercise who's buying something, not developing. If it's developing, it's
yes, definitely. This is a sale, not a development.
Yeah. So what's the sale agreement? Are there any special conditions in there? What are your suspensive conditions? How long do you have to get your finance in place? What is your cash? What are your tenants? What do your leases look like? What sort of operating costs does your tenant have to carry, and what do you have to carry? What is your sort of your monthly cash flow schedule look like? So what are your operating costs? How sure of you? How, you know, your fixed versus your variable costs? What sort of risk do you run there? We then have what if these tenants don't renew? And that gets factored into discussion then around what level of lend we can. We also go into so we will do a valuation at some point just to check that all the property dynamics, the planning is in place, all the right approvals are there, that sort of stuff. And then, you know, we typically give you 70% loan to value. We say, what does the cash flow support? And that will determine the loan to value. But, you know, there will have to be some sort of cash put in. So people need to make sure that they have that available. And then we may also ask them to underwrite in the form of a surety or something, other than the shareholders of the company or whatever the case is. That's the other thing we'd look at, is their corporate structure. Are you buying it in a trust? And, you know, that's where the conversation would go from. But it is a conversation. It's not, here's a form, fill it in, and we put it into a machine. You know, it's very much a conversation. And, you know, and you know, I think it's important for both parties. You know, I think that's where we hope our clients see us as adding value by asking these questions rather than simply interrogating them for the sake of it. Because, you know, we both got as much at stake in investment like this. You know, neither one wants to see it not.
And, you know, Mike, I think one of the things I absolutely appreciated when dealing with financial institutions, when you're looking particularly at commercial, you know, real estate finance, is because it's a conversation. Some of the questions that you're certainly getting from the financing house also help you better prepare. I think certainly when you're in the beginning stages of, you know, getting into commercial real estate, there are probably certain things you're not aware of that you're supposed to be thinking about, certain numbers that you ought to be running, that you either weren't running or you weren't prudent enough in how you're running them. Because I've certainly found that financial institutions tend to be slightly more prudent even in their projections of whatever financial projections you might have. So they try to play on the more safer side, whereas I think as investors, we overestimate, we almost guesstimate at a higher rate what the returns we are going to be getting, which is a mistake I know a lot of us make. Because you think, look, this is an amazing deal, it's a great location, all the numbers make sense, I'll have 100% occupancy, whereas that isn't necessarily, you know, the reality, unfortunately. So I certainly think for people who are exploring commercial real estate, it is a conversation, and there's certainly so many things you can learn as you're having the conversation. I mean, certainly, you know, from the Absa commercial real estate side, this is one of those things where you also want to learn as an investor what you're not thinking about, because I think when you deal with the person at the end, as you're saying, Mike, both parties have quite a lot to lose and win in a particular deal, and obviously both parties want to win. So the questions are really to interrogate how can we best win, and I think that's sometimes something we probably don't consider when you're being asked a million questions from a bank, because it can be intimidating, and you're thinking, look, these people, they don't want to fund my deal. What is going on? But actually, it's how could will have the deal looking way where both parties essentially are able to win. Mike, we're going to leave it there. I'm certainly going to have back. I think commercial property is one of those things that people don't know about. Finance commercial real estate. The difference of the deal, you want to be sure that you're doing the right thing. I think so many people are always like, use other people's money, but we don't talk about the intricacies of even structuring, a commercial real estate deal and how we can best essentially do that so both parties do essentially win.
And a pleasure. Thank you, Zama.
Thank you so much. And that is Mike Mortimer, who's the head of coverage at Absa Commercial Property Finance. Of course, if you are a property finance or certainly a commercial property enthusiast, you've certainly found this one useful. I think I always say this is one of those things where number crunching is so crucial. Excel has to be your friend. Running the models has to be quite important. And making sure that you understand the deal that you're essentially working on and understanding the different components. I think sometimes we do take it for granted that there's so many moving parts to a deal, and making sure that you adequately understand with your consultant that you're working with. And if you are, of course, interested in going into commercial real estate, you want to contact Absa, we have put their contact details down here below. Start having that conversation around how you can certainly access some of the opportunities that we've briefly but also stay homework. Make sure that you go the extra mile in finding out the different aspects before you sign on the dotted line. We're going to go for a quick break, and when we come back, we'll be announcing those 2 lucky winners who are going to walk away with that 1,000 Rand cash prize. And I did promise we're going to also have a special giveaway. You're going to have to stay tuned to find out what it is and if you've essentially won that special prize. So we'll be back just after.
At a time like this, in a world filled with uncertainties, where lives are put on hold, business paused, and working together means staying apart. At Absa, being a bank means staying connected. It means being a part of your future, providing relief at a time of need, and doing this through effective, secure online platforms. It means staying in touch when everyone else seems distant. Being a bank means knowing that we've come from far and are yet to go further. And that possibly this could be a time for a new beginning, an opportunity to reflect and rebuild. We are alongside you, helping you to finance your dreams and grow your legacies. We are in this together. Once as Amal San. That is African messaging.
Welcome back to episode 68 of the Private Property Podcast. I'm your host, Zama Khumalo, and it is that time of the evening where we're giving away 2 1,000 Rand cash prizes to 2 lucky viewers at home. As many of you know, we have been running that competition where we've been asking you to tell us what you love about your town, your city, and we're certainly touched and humbled by the different responses that we've received, and so many stories that a lot of you have shared over the past 2 weeks. You certainly are ambassadors of the beautiful areas that you live in, and surely should be proud of representing your respective neighborhoods so well. Thank you so much for sharing with us your stories of the different neighborhoods that you're living in. And the team has selected 2 lucky winners. I must say it was quite a difficult one because, as we say, we received so many heartwarming, stories from various viewers at home. But these are the two lucky winners who are going to be walking away with that 1,000 Rand cash prize. I'm going to first start reading what they wrote before I say who actually it is. And this one is the first winner who wrote, I live in a town called Newcastle, located in northern KZN, famous for steel and coal, as both Esco and Metal, steel and Vetca make up part of our town. From small beginnings to now being listed as the third biggest location in KZN, we are growing. It is a quiet, laid-back, convenient town. All amenities are close by. Youngsters don't like it much here as there isn't much going on. There's no beach, not much to do unless there's some festival. But if you want an easy place to live where you don't really need a vehicle to get around or prefer peace and tranquility, then Newcastle is the place to be. We have all of 3 malls, a forever busy CBD and industrial area, approximately 20 minutes, an artisan or technical college, police academy, to name a few. It doesn't sound like much to what makes up the beautiful town that I live in. Our winters are cold, freezing, with temperatures below 0 degrees, and sometimes it snows. I actually didn't know that parts of KZN occasionally snow. And summer is hot but not sticky. It used to be that everyone knew everyone, but that's the case. That's no longer the case anymore as the town has grown. It has also won the award several years in a row for being the cleanest town in KZN. Imagine that. That's also something that I didn't know. I mean, I know that we tend to hail Kigali as the cleanest city in certainly one of the cleanest cities in the world and the cleanest on the continent. Brussels is Lisa Swart. So congratulations to Lisa. You walk away with the first 1,000 Rand cash prize. And of course, that means we've got a second entry. And I'm also going to read the second entry first before saying who wrote this one. And this one goes, I'm from Katlehong, east of Johannesburg, one of the most iconic yet underrated townships that played a huge role in the political struggle. I love my neighborhood for the unrelenting persona, booming township economy, and home to some of the most chilled entertainment spots, the likes of Escaleni Chisanyama, Hurricanes Pub and Grill, Biblos Cafe, and Teflof, aka Cornel Limpopo. However, apart from the entertainment, we boast some of the most prominent figures. For example, Mr. Bonang Mohale, Professor Zeblon Vilagazi of WITS. He's going to be the incoming Vice Chancellor from next year. Musa Makate, who currently at loggerheads with Vodacom for his Please Call Me idea, and the legendary Emmanuel Skarangobese, aka Black Jesus, rest in peace, who played as we have people to look up to who come straight out of the townships, yet worked hard against all odds to change the narrative and history of the so-called slums. I represent the East Rand wherever I go. As Shot Twala tells me the masses about the hood man. And that one comes from Tapelo Muliewa, who is the second winner who walks away with that 1,000 Rand cash prize. As somebody from Ekasi, I must say I'm slightly biased, so I'm really glad that a second winner came in from somebody from Ekasi. I can say I wasn't one of the people who chose the winners. And I did promise that we're also going to have a special giveaway, of course, because we were so overwhelmed with the different responses that we certainly received in this competition, and really loved going through, the different stories that a lot of you had to share. The team decided that we're also going to be giving away an extra prize for this particular competition. And I'm sure you're probably sitting at home and thinking, okay, this is quite an interesting one. And we've decided to give away 1 gig of data to the following 5 participants who also participated in this particular competition and shared with us their heartwarming stories about their town or city. And that is Roseanne Moodley, Funanani Funi Mugabi, Orion Deep SA, who messaged us on YouTube, as well as Colleen Janssen and Vanessa Victami. We will be sharing the contact details down here. We'll be sharing their names. All we ask is that you send us a DM, whether you are following us on Facebook or following us on YouTube, so that we can give you your 1 gig data. Congratulations to all our winners. Having with this competition, we've got in a sense different areas that we of course do. as we www.privateproperty.co.za. We will, of course, be running future competitions. We do love doing giveaways right here on the Private Property Podcast, so do stay tuned to find out what more you can expect from us. But until week, it's been in terms of making sure that they do their best for their property portfolio, but also growing their property portfolio. We're going to be back on Monday evening at 7 o'clock. But of course, over the weekend, you can tune into the Developer Show with Chad, where you can get a taste of some of the country's best developments. And one certainly do not want to miss it. That is tomorrow and Sunday at 1 o'clock. So do stay tuned, of course, across our platforms to find out more details about that one. Until then, me Zama Kumalo, it has been an interesting one. I do hope you're going to have an incredible weekend. And of course, as usual, stay home and stay safe. We'll be back on Monday.
Hi, I'm Brian Kepper. I'm a 10-time South African motorcycling champion. My family and I have chosen to live in Fourways. There's some really great suburbs in our neighborhood. There's a lot of families living in the surrounding areas in places like Lone Hill and Cedar Lakes. What draws people to Cedar Lakes is that it's so close to the Broadacre Shopping Centre, Cedar Square and Fourways Life Hospital. Lone Hill is a major draw card for many families. It's got some great smaller commercial centres and some fantastic schools like Crawford College. From an entertainment point of view, Monte Casino really comes alive at night. There's so much on the go and there's an incredible energy in the area. Our family just loves the fast-paced lifestyle that Fourways brings. But honestly, the thing that attracted us most to this area was the active lifestyle that it offers. As a family, we've chosen to live in Fourways because of the lifestyle and convenience, and this is our neighborhood.
What is a bank at a time like this? In a world filled with uncertainties, where lives are put on hold, business paused, and working together means staying apart. At Absa, being a bank means staying connected. It means being a part of your future, providing relief at a time of need, and doing this through effective, secure online platforms. It means staying in touch when everyone else seems distant. Being a bank means knowing that we've come from far and are yet to go further. Sibuya go there, futhi sisaya go there. And that possibly this could be a time for a new beginning, an opportunity to reflect and rebuild. We are alongside you, helping you to finance your dreams and grow your legacies. We are in this together. Regal fela, sisoke. Once as Amal San. That is African messaging.